Well, holy! This week, the S&P finally hit and closed above the 3,000 mark, and we are nearly back to the record high that we saw of 3,386 back February 19th earlier this year. Before that whole worldwide pandemic that could totally wreaked havoc on the entire market. As you probably remember, this is also the same level that we were trading at back in October. So for those of you that were sitting on the sidelines watching others make incredible profits and worrying that you had missed out, maybe now's your chance. Of course, with all the rumblings in Washington, D.C. about regulating online big tech giants, maybe we're ready for another crash. Hello and welcome to Stephen Carlson Show. I'm Stephen Carlson. I'm a successful tech entrepreneur, author, YouTuber, real estate investor, and I'm even a volunteer paramedic. Now, this week we finally did it. We have crossed over the psychological barrier of 3,000 points on the S&P. Now, this may be a huge shock for some of you based upon all the news stories that we keep seeing of record levels of unemployment, businesses filing for bankruptcy, airliners flying with nearly empty jets. Yet, with all of this information, the stock market is still just humming away. Sure, there have been some ups and downs, but honestly, if you go back to March, when we had that big crash, it's been mostly a steady climb back up to 3,000 since then. So why is the market seemingly ignoring the real-world situation of businesses being shuttered? Is this the final dying gasp of air from the market before we see another major crash? A crash unlike what we have ever seen before? Before we can make any educated predictions about what will happen with the market, first, let's explore some of the reasons as to why, precisely, the market is acting this way, and maybe there's some clues we can glean from this. Okay, now, before we get started, I put a lot of time into researching and writing the scripts for these videos, so if you enjoy them, please make sure you smash the like button and subscribe to my channel. Doing so really helps with the YouTube algorithm. Thank you. Now, as you know, in March, with that illness that will remain nameless so that YouTube doesn't put my video in YouTube jail again. Anyways, back in March, that illness caused pretty much the entire world to shut down overnight. Some places stayed open longer, of course, but for the most part, businesses just stopped, period. And this caused the stock market to violently react, where we saw some of the worst days in our economic history as we hit multiple market circuit breakers in a desperate attempt to lessen the damage. Overnight, businesses lost almost all of their revenue, and they were quickly falling behind on their expenses, causing millions of Americans to go unemployed. Now, Congress attempted to help with the passage of the CARES Act. However, nearly 2 months later, millions of small businesses are still waiting on their economic injury disaster loan, that EIDL that they were promised. Why don't you check out my videos all about the SBA's PPP and EIDL program. The links will be in the description and also in the card above. So why does the stock market keep climbing higher even when these businesses are basically shuttered throughout the country? Honestly, the reasons may surprise you. Now, do you have a guess? If so, go ahead and pause this video for a minute, go ahead and type away on the comments down below and let me know what your guess is. I can wait. Okay, you're back. You made your guess? All right, cool. Now, first, a little quick background, but don't worry, I'll make this quick. The S&P 500 index tracks the top 500 publicly traded companies in the United States, and it is weighted by each company's market capitalization. So if a company is valued high, then it has a much more substantial influence on the total cost of the index. Why is this little tidbit of information important? Because out of those 500 companies in the S&P, only 5 account for a total of 25% of the entire value. That's Microsoft, Apple, Amazon, Facebook, and Google. I think you've probably heard of them before. Now, if we step back for a second and look at the total 500 companies of the S&P, we will see that 395 of them have lost money year to date. Only 105 of them have actually gained value. That means a staggering 79% of the businesses on the S&P have lost money this year. Whoa, wait a second here. So if 79% of businesses on the S&P have lost money in their stock value, how in the heck could the S&P be almost back to its record high. The reason is for those 5 companies that hold 25% of the entire S&P value. They are doing exceptionally well right now. Think about it. A lockdown has people at home. What do they do at home? They use technology products from Microsoft, from Apple, from Amazon, from Facebook, and Google. Year to date, Microsoft is up 15.92%, Apple is up 8.88%, Amazon is up 30.44%, Facebook is up 11.64%, and Google is up 6.04%. This is why the S&P has gained so much value during this pandemic, while the rest of the market has either lost money or just completely stagnated. In fact, these stocks have done so well that if you had magically a time machine and you could go back to February of 2005 and invest $2,000 in each of these stocks, your initial $10,000 investment would have gained 292%, giving you a total value of $39,292. That totally blows away the 62% gain by the S&P that you would have seen during the same time. So for comparison, if you had put that same $10,000 in the S&P 500, you'd only have $16,190 now. That's not bad, but it's still $23,102 less than the first option. Now, of course, as they say, hindsight is 20/20. With that knowledge, if you could go back in time, it would have been a no-brainer to purchase those 5 stocks. In fact, I would have borrowed every penny I could from friends and family, and that would have been a great investment idea. But honestly, it's impossible to know at the time. And since we don't have time machines, it is a horrible idea for you to borrow money to buy stocks. Now, based upon these historical trends of these companies and the seemingly bright future these technology stocks have, is now a good time to invest? Have you waited too long? Did you miss the boat? Or are we on the verge of another collapse? Well, as I write this script, just minutes ago, the president announced an executive order to remove some of the protections previously afforded to online publishing companies such as Twitter, Facebook, etc. This is starting to signal potential for additional oversight of these tech giants from the US government, which honestly is never very good for stock values. Now, while these 5 tech giants account for a quarter of the S&P value, the beauty of investing in a fund like the S&P is how it automatically diversifies your holdings for you. So if something bad happens to one company, as long as it's not sudden and it packs a bunch of them, usually the rest of the fund can evenly balance things out for you. Now, putting politics aside for a moment, I think that we will see these tech giants continue to grow larger and larger over the next few years, and that'll bring the S&P along for the ride. Now, this brings me to the next reason the market is gaining in value. We need to consider, at least for a few minutes, how the Federal Reserve stimulus has helped to keep the market up while the rest of the businesses have been completely shuttered. In multiple interviews, they have flat out said that they will do anything and whatever it takes to keep our company moving. And honestly, I believe them. Here's why. At the end of the day, the Federal Reserve is a private company owned by shareholders. It's not a government entity. Now, I'm not going to put on a tinfoil hat. We're just speaking the true facts here. The only way they continue to make money is if the current financial system is kept alive. So if for any reason the US economy were to completely collapse, trillions of dollars would be lost. And this is something that the Federal Reserve does not take lightly. So what does this mean for you and for me? In the long term, the market is basically guaranteed to make money. Of course, there's going to be ups and downs, but over a long time horizon of 10 or more years, the trend will be up. This is not exactly a secret. In fact, many news reports have shown the number one use of the $1,200 stimulus check was to buy stocks, with much of this being first-time investors. Charles Schwab has reported a record high of 609,000 new signups to their online trading platform in Q1. And now this brings me to the final reason why I think the market keeps increasing in value. As long as people keep purchasing stocks with their stimulus money, the price of shares are going to continue to go up. So with all this in mind, is now a good time for someone to begin investing in the market, or are the values already too high? Well, first off, before you can invest, of course, you need a brokerage account with cash deposited in it. Remember, when you put money into a brokerage account, especially when you're a new customer, it might take a couple days for that cash to be available for you to use. So you need to open your account now, so that way the money is there, so when you see a great deal, you can snap it up. Now, I highly recommend you guys use the Webull stock trading platform because they give you 2 free stocks, with one of those stocks being valued up to $1,400 when you deposit $100 into their platform. Please use the link in the description below, as it will give you your 2 free stocks, and it also helps support the channel. So now that you've got your trading account, is now the time to invest? Well, yes and no and maybe, and well, just let me explain. Currently, the market is very news driven. Well, honestly, it always really is, but now it is being taken to the extreme. When a pharmaceutical company announces positive test results for treatment, stocks immediately rally. When a study comes out saying that a specific treatment may not work, people frantic, and they immediately go and sell every one of their stocks, and boom, there goes the market. In a single day, you can easily see multiple percentage points up and back down in the same day. So, for this exact reason, in my opinion, and remember, I'm just some dude on the internet, you should definitely consult with your CPA or investment advisor. Now may be the perfect time to start investing. And honestly, in my opinion, now is the perfect time. The key is deposit your cash into a trading account so you have it ready for you on a good day when the market drops a few percent, you can snap up the great deals. For example, as I'm writing this script, President Trump's announcement about Twitter has dropped the entire market a few percentage points. If you had your money ready, you could be snapping things up immediately. Now, once you have your stocks, the key is not to make any knee-jerk emotional decisions. If you see the S&P dropping a few points, do not panic. Even if your value tanks temporarily, remember, it's gonna come back. And also, very important, you do not lose any money until you actually sell your shares. The value you see in your trading account is just an arbitrary money, as if you sold it right now. If you keep it for 10, 20, 30 years, you will see the value will go up and you will thank yourself. Now, I'm adding a new section to my videos where I feature amazing YouTubers that provide content that I think you guys are gonna love. Today, I wanna give a shout out to Alex and her new YouTube channel, The Freelance Fairy. She is a massively successful Fiverr pro seller that makes over $350,000 a year on her gigs. As millions of Americans have lost their jobs, now is the perfect time for you to find a new and creative way to diversify your income streams. Alex has mastered the art of working as a digital nomad, as she refers to it. She travels the world and enjoys her life, all while building a very sizable net worth. In her videos, she gives you her secrets on how to be successful as a gig worker. Go ahead and check out her channel. The link is in the description, and make sure you tell her the Stephen Carlson Show sent you. Thank you very much for watching. I really hope that you enjoyed this video. Please make sure you like and subscribe to my channel, as it really helps with the YouTube algorithm. Thanks, and I'll see you on the next one.